right, welcome back to Inside Scoop. This is Sean Emery, the founder and chief investment officer of Avery & Company. We finished another week here, and it was all around earnings once again. It was around the Fed once again. It was around inflation and jobs once again. I'll start with the Fed and just knock that out of the way, and then I'll get to some of the earnings reports, specifically around, Block, Apple, Zillow, and Omnicell, to say the least, and maybe some context around, companies like Paylocity and Paycom. Just to start with the Fed, obviously the Fed came out this week and expressed some neutrality, I think, versus inflation and jobs. It sounded like in the press conference that Powell was leaning a lot closer to, what's the health of the jobs market and the labor market as compared to inflation. What you've seen from us, whether it's on Twitter or LinkedIn or through some of our research that we send out, is really the fact that we believe that inflation continues to moderate, subside. There's so many things you can do, but one simple thing is remove real estate, which is a lagging indicator. Another thing is to supplement the current owner's equivalent rent with more real-time indicators like apartmentlist.com and realtor.com or zillow.com, and use those data as proxy for real estate inflation. And what you find or get from that exercise is that inflation is actually running closer to 2% or sub 2%, depending on which metric you use. And that's important. In our Investing with Data newsletter, sent out this morning, we shared that apartmentlist.com year-over-year rent growth, price growth was down negative for the 11th month in a row. Realtor.com, 8 months in a row. We didn't share that on the newsletter, but just highlighting some of that. So, anyways, that's the inflation side. Now, the job side, 175,000 jobs, 22,000 jobs were removed from the prior 2 months. Last month's reading was actually strong. This current month's reading was 175,000 jobs below the 6 and 12 month moving averages. It's not bad, but it's I think it's moderating, and I think ultimately what that signals is what we've been saying the whole time, that Q3 comping against Q3 of 2023 will be difficult for the economy, and therefore will seemingly look like the economy is slowing and be the catalyst that rate bulls have wanted for some time. Okay, now let's turn to some of the companies, and I'll start with Block. Block is, Square, Cash App. They had an incredible quarter. They have really pivoted to profitability and doing so in a pretty major way. Operating income, net income are all growing by 300 and 600% respectively. And a lot of that is coming down to, promoting productivity within the organization. They went from 14,000 employees to capping it at 12,000, and that's showing up in the margin structure of this business. So a lot of cost disciplines. That's what drove the Q1 2024 beat, and then they raised it by more than the beat, which I think was, arguably the most important thing. He started the shareholder letter talking about Bitcoin and the reason why they focus solely on Bitcoin, in addition to highlighting some of the successes that they've had with Bitcoin as an investment. I think they're up 160% when they made that investment in Bitcoin. And today it's, north of $500 million in cash, let's say. They committed to 10% of gross profits from Bitcoin being reinvested into, Bitcoin itself. And really highlighted that Bitcoin for them, why they focus solely on this is, they have the belief, or Jack has the belief, therefore they have the belief that the internet needs a single currency, I guess, or a single means of transaction, and one that's global in nature and decentralized with essentially no barriers, and that they can successfully potentially build a consumer-oriented application that coexists with that network. It makes a lot of sense to me. Now the question as an investor, and we're investors in Block, this is our second go round with them, is how much are they spending? And they highlighted that pretty well. Essentially, sharing how it's a small, 3% of spend. It is has a pretty nice return on investment. I think they highlighted how it's roughly like 3x the amount of marketing spent, to drive the amount of gross profit dollars that Bitcoin and that ecosystem drives for them. And they shared how many users are actually using it inside of the app. So it is driving engagement. I think it was 2+ million users. And so that's important. Now, the second thing that Jack highlighted a little bit was around the media reports regarding internal practices. And there was a DOJ headline, and he basically batted this down, highlighting that they were the ones that reported the issues a couple years back now to the government or the agency, and that ultimately was what led to some of the inquiries that were happening. Now, Jack highlighted that the media report related to the existing inquiry was not the same, or was the same inquiry, and that the previous one was closed, and therefore, again, there's not much to look at here. They also, again, was highlighting how a lot of that information around Square providing the information, reporting the incident was omitted from the story, and as opposed to making it sound like this was something that was the external inquiry from kind of like a whistleblower or something. Back to the business, they are targeting a rule of 40 by 2026. They reiterated this. They're well on pace. Their original guide was for 29%. The last quarter, when they guided, they increased that to 32%. So they're getting closer and closer to this. The FY24, so the fiscal year 2024 guidance included a boost to gross profit. So now it's representing growth of 16 to 17%, and adjusted operating income now representing somewhere around 14 to 16%. And again, that allowed them to boost the rule of 40 goal, at least for 2024, to 32 from 29. So when you look at the underlying business, whether it's Cash App, you continue to see traction there, growth there. 57 million users, up 1 million from the last quarter. If you put that into context as it relates to the working population in the U.S., there's probably around 185 million working population in that age cohort. And of that, you should assume that some of those are 50 plus in age, or 60 plus in age, or 50 plus in age, and the rest are really the cohort of what Cash App is going after, at least today. And that puts you around 120 million or so of a demographic and working population that we think is the target. So 57 million attached to that suggests that they're well over, or they're right around 50% of their age and working population demographic, which is pretty significant penetration. Now, they work on an inflows framework, which is the amount of users, 57 million, the inflows that come in to the platform, and then obviously some sort of take rate associated with that. The biggest driver of the growth in gross profit dollars, and along with the health of Cash App, was around the amount of inflows, which grew once again quarter over quarter and year over year, by roughly 9%. And I think that's, again, really important. The Cash App monetization rate increased 7 basis points year over year. So again, super important. And again, the biggest thing that Cash App's trying to focus on today is bank the base, and really trying to move deeper into their ecosystem. They did highlight in the press release, the shareholder letter, a commentary around remittance, which competes against someone the likes of like Western Union. I think that's a pretty interesting kind of announcement that they didn't really talk about, and we'll see what the product manifests into. But it was really around Bitcoin, I guess, and what they're doing there. So we'll see as they go forward. A couple other data points I think that's important to highlight on Cash App was $71 billion of inflows during the quarter, which is massive if you really think about that. And gross profit continues to rise there. The Square ecosystem performed really well as well. International is I think the main takeaway there. That was growing plus 35% or more, and is now, in the teens in terms of percent of contribution to overall gross profit for Square. So as they lean more and more into international markets and lean more and more into, specific verticals, they highlighted a big franchise win with a Mediterranean that has, a lot of locations across the nation. And that suggests that some of the transition they've made to a verticalized sales structure for Square is paying dividends today. Again, not to continue on, we'll have a webcast, earnings webcast, and we'll go into more detail. But I think the big picture there, the biggest takeaway was, profitability, the fact that, the product innovation is still in full force, that Cash App and the Square ecosystem's healthy. You have the international exposure that's buoying some of the U.S. exposure and keeping the business, diversified across. And that's it. I'll move on to, Apple really fast. And, for Apple, they reported, in absolute terms, a pretty weak quarter. Revenue dropped 4.3% to about, $91 billion. This compares to a 2.5% decline in Q2 of 2023. Services, Mac grew while iPhone and iPad sales declined. Services was really the leader here, 14.2% versus, 5.5% last year. And led, or the lead, what led that was App Store and double-digit growth in paid accounts. The Mac rose 4%, iPad fell 17%. Obviously, one of the biggest story here is capital allocation, the biggest on record in terms of buyback announcement, which was, $110 billion, which is crazy just to think about it. Now, they highlighted, during the earnings call and beyond that was, seeing some pickup throughout the year. Number one, it's easier comps. This company hasn't grown really in like 8 quarters. So comps just continue to get easier. There's potential for a refresh cycle that's coming up here that I think people are excited about. And, that's the story. I think Apple continues to be a asset that people feel comfortable holding despite the valuation. A lot of it has to do with capital allocation and, penetration and durability of the ecosystem. So, I don't think there's much more to share. I think China story is an important aspect of it as well, clearly. But I do think, their high reliance on China is their biggest risk as well. It's, majority of the products are assembled there, or like used parts that are manufactured in that region. And, Greater China accounts for 18% of sales. So any restrictions or anything like that is a risk going forward. I'll touch a little bit on Omnicell, the medication management adherence, platform, the leader in that space, 60%, market share. And, I'll be quick. They, beat their own guidance. They held their guidance for the full year. The biggest takeaway there is that they're seeing pretty significant or pretty, meaningful, health in the hospital system. They highlighted how margins continue to increase for hospitals. The nurse shortage is easing, and that's allowing, some of their customers to begin deploying. They also announced a refresh or a new part of their product line, and they announced that here in the last week and a half, and they're seeing traction there as well. Their IV robot is now being or progressing in terms of state regulations, and they see no bookings now, but they expect it to meaningfully impact going forward. So again, I think you saw positive and supportive of a ramp in product revenue anticipated for the back half of 2024. They're seeing better demand environment, with improving volumes and financial conditions of the client health system. So I think all of that is a positive for them as we push forward, and kind of gets them out of the way from some of the health care or hospital weakness that essentially is their end client. And as that gets and moves to the side, it positions them well for the future. Zillow reported, and this will be the last one before I give it up for the weekend. But Zillow reported earnings. They reported a really healthy report. Really crushing their own guidance, crushing the estimates that we had, and doing so in a way that I think was pretty well diversified. They highlighted a lot their rentals business, which is growing, right around 30% year over year, and is now 25, 26% of all the revenue. Historically, Zillow was a business that sold leads to, premier agents or agents. And that was essentially how they made money, and was highly sensitive to the housing volume and housing prices. And that has been less so over the course of the last year and a half. And they've outperformed transaction volume in residential real estate. Now, they're also benefiting from their mortgage business that they've leaned into here recently. And that has allowed them to take market share for new home originations and existing home originations overall. But some of the highlights, again, the biggest highlight for them is really around rentals. The success they're seeing, in that space. They have 40,000 multifamily units on their platform now, and given their scale in rentals, they've Realtor.com is leveraging Zillow's multifamily unit count and putting that on their platform as well. So again, $529 million in revenue for Zillow in the quarter, an adjusted EBITDA of $125 million. They had 217 million monthly active users, 2.3 billion visits to their website. And again, I'll highlight just quickly some of the revenue across different product lines. 393 million for residential revenue, 97 million for rentals business, 31 million for mortgages, and that came from 601 million purchase loan originations in the quarter. So again, the company continues to progress nicely. They're sensitive to the rates in terms of sentiment for the stock itself, but when rates continue to come down, or when they come down, I think this will be a hockey stick moment for the name. It's not a recommendation there, but I think that's it. So I'm going to stop there. I don't want to go too much further here. Again, we'll have a webcast on all this, but again, I think that helps summarize what happened this week as it relates to the Fed, to the jobs market, 175,000 jobs, to Block crushing estimates. Omnicell seeing traction in the health system. You saw Zillow perform well. Apple, in absolute terms, I don't think it was all that nice, but I guess better than relative to expectations. And then I was supposed to touch on Paylocity and Paycom. I'll talk about those in a future conversation. With that, make sure to subscribe, and we'll be on here next week.